Hello. So I've made some adjustments to the longer term charts, and today we're going to talk about exactly what those are. In the longer term summary page found in the Stock Market tab of Stock Traders Daily, you're going to be able to find and read exactly what I'm going to talk about here in this video. You have to log in, of course, go to the Stock Market tab and the long term summary page. When you get there, you're going to find some very interesting changes to our longer term chart patterns. The longer term chart patterns that had been in place dated back to 2009. Those longer term chart patterns were broken last week. You can see breakouts here in the NASDAQ, breakouts in the Dow, other markets as well. There were breakouts in all of them. And when that happens, when the market breaks out like this, adjustments need to be made. And that's exactly what happened. The adjustments that we made changed the chart patterns, the duration of those chart patterns from what was multi-year to what is now barely over a year. These chart patterns are still important. They still help us determine support and resistance levels within a more longer term pattern. But in this case, the patterns are much tighter than they were before. These adjusted patterns are exactly what I'm going to be talking about today. Specifically, I'm going to be talking about these candle patterns. Look at this aggressive candle that existed from last week's action. We have seen this happen before. There was an aggressive candle back in September, back in March, and it happened in 2011 as well. All of these corresponding to this upward sloping trend line that is now our adjusted longer-term upward sloping resistance line. The important takeaway here is not that a candle existed. It's what happened after those candles surfaced. Notice back in September, there was an aggressive candle followed by another aggressive candle. And it wasn't the first, but the second aggressive candle that actually pinpointed the top of the cycle, the test of resistance, and the decline that ultimately followed. In fact, you can say the same thing if you date back to March. The exact same thing happened. Large candle, followed by a topping, and then a decline. You can even say that if you date back to 2011. These aggressive candles that are happening near this resistance line fall into a pattern where an aggressive candle like this happens, then a second candle, usually an aggressive one, also follows with tests of the resistance line. And when that happens, then the market starts to pull back. Now, it's not as if the market is going to pull back by 50% given what this chart pattern says. But this chart pattern does say that if we do indeed press up to this resistance line, and if these candle patterns continue, the pullback can be about 10% within a normal upward sloping channel, just like we saw after September of last year, just like we saw after March, and arguably in 2011. This is something that we've seen before. The market is repeating this process, it appears. The candle is in place. If we have an aggressive up week next week, we most likely will see a top either next week or the week afterwards. I might also want to point out here, in the S&P 500, the channel pattern and the respect of the channel pattern is a little bit different. Yes, it's oscillating within this same upward sloping cycle. Yes, the aggressive candles are followed by second aggressive candles. But notice what happened in the S&P 500 the last time this cycle happened. The S&P 500 fell short, and it stalled at a neutral resistance line without increasing all the way to that upward sloping trend line. If that happens again, and it could, the S&P might stall at this neutral resistance line, which is its 2007 high, right? 1568. The S&P appears to be in the process of increasing, of course. The candle patterns are the same. This is congruent in all markets, by the way. But in the case of the S&P, there might be a stall before the market actually gets to that longer term upward sloping resistance line again. This gives you a tangible feel for where the market may indeed stall. 1568. I'll read here with these channel adjustments and the bullish candle from last week suggests that another bullish candle can come, but a top, if that happens, are likely to be right around the corner. You can open this chart, you can read this chart for yourself right now by logging into Stock Traders Daily and looking at the longer term summary in the stock market page. I hope that helps explain the adjustments that have happened to the longer term charts. I hope that helps explain the candle formations that exist right now. And if you have any questions, I'm happy to answer them, of course. But please use the message board. That is the most effective way for everyone to get an answer, because more than just you and I have questions when it comes to the changes that have happened. And as a result, we want to put all of those questions and answers out in the public so that everyone can see what we're talking about and be able to take advantage of the answers that we give. Thank you very much.